Welcome to the Long-Term Investing Podcast with Baskin Wealth Management. I'm Barry Schwartz, President and Chief Investment Officer. In this podcast, we ignore all the noise and have conversations about the things that matter in today's markets. It's what we talk about with each other here in the office, and we want to share those conversations with you. Please stay tuned for our legal disclaimer at the end of the episode. Welcome to the Long-Term Investing Podcast. I'm Barry Schwartz.
I'm Ernest Wong.
And we're back after a little vacation, back to podcasting, but no vacations from the market, Ernest.
No.
That doesn't stop. If you like this podcast, of course, please subscribe to us on YouTube, on Apple, on Spotify. We'd love your 5-star reviews. Please leave a comment. And of course, if you need any portfolio management services from Baskin Wealth Management, we'd love to meet with you. And maybe you need a second opinion on your portfolio. Maybe you want to talk to us about how we invest, learn a little bit more about our strategy. We're an open book. We love to discuss what we do. We talk stocks all day long. We talk them on a podcast. Ernest was on a plane. Ernest was in Europe. He was talking stocks and checking out the sites. So this is what we love to do. This is what we live for. So we got a pretty cool show today. Back from vacation, we're going to talk again about big tech capex, such as, growing insane, Alphabet's stunning recovery. You want to dig in a little bit about Constellation Software?
Let's do it.
Let's do it. So Ernest, talk to us about your European vacation.
So we went to Europe,
Yeah.
Mostly the Mediterranean region, including Italy, France, a little bit of France, and then Spain.
Okay.
Vacation was a little longer than we had originally planned for because of the Air Canada strike.
Pretty unlucky. So the Air Canada flight attendants went on strike for a few days and bungled everything up. And what, you had to wait a week to come home?
Yep.
How much would have cost you to rebook and come back earlier? Because you went with your kids, of course, the four of you.
So this was interesting.
Yeah.
Because under Canadian airline regulations, airlines have an obligation to rebook you within 3 days, even if that means on a competitor airline,
Okay.
if they were not able to fly you back on your original itinerary. So because of the strike, I was originally scheduled to fly back on Monday, and they booked us for the following Sunday.
That's a long time to stick around for an extra week on vacation. Yeah.
So well after 3 days. And if you go on Google Flights and like any of those air ticket aggregator websites,
Yeah.
you could see that Transat and WestJet had been adding capacity from Barcelona or London and Paris back to Toronto. And for a one-way ticket, they were charging $6,000.
Oh my God. And
So
the
somebody-
same ticket one way, normal on a normal time, 1,300, 1,500, something like that.
I think
Yeah.
I think a normal round trip
Yeah.
is about 1,100 to 1,200.
Toronto to any of the major European cities.
So
Wow.
somebody was clearly making a lot of money during that time.
So why do people hate on Live Nation and stuff with their dynamic pricing when the airlines clearly take advantage of the opportunities and are even worse and disgusting?
I can talk for a long time about this topic because I think that society as a large doesn't appreciate. It's weird because the airlines are simultaneously viewed as evil price gougers, while from an investment perspective, we understand them to be terrible, capital-intensive, low pricing power businesses. And so that gap in perception has always been something that has been very interesting to me.
Well, those that had to get home for whatever reason, and we had one employee here who had to get home. She was also at a European vacation, and she spent the $6,000.
Okay.
Well, but you're not going to spend 6,000 times 4.
Well, I didn't mind being in Barcelona.
Fair enough.
And I think maybe contrary to some of the social media posts that you might have seen out there, I think the experience wasn't that bad from Air Canada rebooking us. They provided us with hotel. They provided us with meals. I think it's a little long, but I think it worked out all right.
Cool. So from an investment perspective, because whenever we travel and whenever we get out of the office, we like to see what's going on with the world, what people are spending money on, what the new trends are, the new fads. Also, check out some of the companies that we own that may have international operations to see if there's traffic at their restaurants, at their stores, so on and so forth. So, why don't you give us a quick rundown on, from an investment perspective, what's going on with Europe and things that you learned?
What I love most about traveling and going on vacations to other places is really seeing how people live differently than the way that we're used to here. Seeing the way that people shop, the way that people get around the city, seeing the way that people pay for things.
Mm-hmm.
So I think people often don't realize that. I think this is especially relevant when you're looking at companies that are trying to grow internationally, because the way that business is done in other countries is just so different from how things are done in the country that you're used to. You really do need to have a local operator that understands the market, that understands what the consumer in that market is looking for. So I think one thing that I really like to do when I go on vacation is I like to eat at McDonald's in the country that they exist in. And I think,
how does your gut take it?
No, and the reason that I like going to McDonald's in Japan, in Italy, in Spain is not just because I like McDonald's. It's because McDonald's caters their food and the menu in a way that is both authentic to McDonald's, but is also unique to the local flavors of that market.
Okay.
So, for instance, in Florence, I ate at a McDonald's there. They have tiramisu.
Okay.
You can't buy tiramisu in Canada. McDonald's.
I'm not sure I would ever want to order tiramisu at a McDonald's, but I would assume that in Italy it's probably made right.
And it was not authentic artisanal tiramisu.
Yeah.
But it was pretty good.
Okay.
And it's on the menu and local Italians are ordering it.
Yeah.
So, and that's true for that's true when you go to Japan. Like, so when I was in Japan, they had instead of apple pie, they have like a yuzu pie.
Okay.
Right? So catering to the local market, understanding what the local market likes and wants.
Very
right?
smart. Very
and
smart.
So a lot of time, and this is why, from an investment perspective, I think we very rarely bet on a company's international growth opportunities. And I think that has served us pretty well over time, because if you look at the examples of, like, for instance, Starbucks in China, right?
It worked until it didn't.
Yeah. And it's been a very tough journey for Starbucks in China for a whole variety of reasons. And it's just hard for us sitting here in Canada to be able to evaluate whether Starbucks is going to be successful or not.
Of course. Any other examples or any other companies that we own that you checked out over your trip?
Yeah. So another one that was interesting is that, do you remember in 2020, I think it was 20 or 2021, when Alimentation Couche-Tard, they tried to buy Carrefour.
Yes.
The French supermarket chain. And the deal didn't end up happening because the French competition authorities blocked it on national security concerns. They didn't want the Canadians owning their major supermarket. But analysts here were like, the market didn't like the deal. They thought that Couche-Tard was stepping outside of their core business. They were buying things that they didn't understand. Like, why is a convenience store chain buying a supermarket? Right? And I think what was interesting to me was in Italy and in Spain and in the parts of France that we were in, they don't have 7-Eleven. Yeah. They don't have Circle K.
No, they have these hypermarkets, these small supermarkets / convenience stores.
Yes. They had a lot of what they called Carrefour Express stores, which are basically combo supermarket convenience store locations, because that's how people shop in those places.
They don't bring their SUV to
No.
the Costco's and fill it up. I mean, they do when they're on the outskirts, but not in the middle of Milan or Florence.
Yeah, you're not even allowed to drive there.
No, exactly.
So I think that's the kind of local knowledge that I think people often don't realize that they have, right? The example that we always give is Tim Hortons in Canada. I don't think people around the rest of the world understand what Tim Hortons is the way that a Canadian would understand it.
So I think you're making a really good point. So if people who own Couche-Tard actually went to some of these Carrefour Express stores, would say it's the same thing.
It is.
It's the same thing. And why shouldn't Couche-Tard make an offer to buy a company that they think they can run better if there's synergies or what have you, if it's being offered at a good price.
And back to the earlier point is that, of course, like for companies that do have international operations like Couche-Tard, they always take a decentralized local approach to running the business, where it's not Alain Bouchard sitting there telling their the office, like their stores in Europe, is like, this is how you got to run the store, right? Because recognizing that there's a person in Europe who understands the market and is going to do a better job.
For sure. So you can't go to Italy without checking out Ferrari,
right?
Company that is synonymous with Italian high quality. Stock has been in our portfolio, Ernest, for quite a long time. Still can't buy a Ferrari. Years waiting list. Stock is pulled back a little bit, but still been on quite a tear. So, did you do any searching out of Ferrari and try and figure out what's going on there?
We went to the museums. They were in, I don't know if I'm saying the name of the place right, but Modena, or Maranello. Yeah. There's two museums. One is focused on the life of Enzo Ferrari, because that was the childhood house that he grew up in. Yeah. And there's another that's dedicated to the cars. Okay. So I had to try and convince my wife that like the cars that we were seeing in the Ferrari museums were basically works of art. Yeah. Right. These are limited production. Like there might be 10 of them in the world. Each one was handcrafted, carefully painted, hand painted. It has a very unique design. Yeah. And it's worth like 2 million euros. Wow. Right. So my wife didn't get it.
Was there a lot of people at this museum?
It was pretty busy.
Wow.
And I think the museums themselves are fine. You actually can't go into the Ferrari factory unless you own a Ferrari personally. So that's
not us yet.
Not yet. Yeah. But that's the only way you can go into the factory. Yeah. And there is an interesting tidbit from the museum that I didn't learn about, which was that Ford actually tried to buy Ferrari at some point. I don't know if you knew that.
No, I didn't know that. I know there was a movie, Ford versus Ferrari, but I didn't know that Ford actually made an offer to buy the company.
Yeah. And so
that would have been smart.
There had been an agreement for Ferrari to sell itself to Ford. And what happened was that literally this is literally what the sign says in the museum. The Americans got arrogant. Yeah. They tried to say to Ferrari, they tried to move the manufacturing of the cars of Ferrari to America and leave the racing team operations to Enzo Ferrari. Okay. And then, of course, like the Italians, they said, no way, we're not, the cars have to be made in Italy. And that's what led to the deal breaking and what led to Agnelli and Exor eventually acquiring their stake in Ferrari. So that was a part of history that I thought was interesting.
Did you buy any Ferrari swag?
I think the gift shop was as premium priced as the cars themselves.
I bet.
Like a poster was like 50 euros.
Ouch. Were people buying that stuff?
They were.
Awesome.
People were buying them.
Awesome. Buy that merch. So that very cool. Glad you're back, and we're gonna try and do this podcast more regularly now that unfortunately summer is coming to an end. Over the last few weeks, of course, Ernest, there's been a lot of noise, a lot of headlines. No question, Trump more tariffs and potential of working on a deal to try and solve the Russia-Ukraine war. I mean, I'm not sure that those things are here or there for the markets, but of course the market was focused a lot, obviously, on concerns about more tariffs, as well as Trump intervening, of course, with Intel, as well as potential to try and fire Powell on the Federal Reserve. So these are the things that get people nervous, of course, creates a lot of uncertainty. On the flip side, of course, corporate earnings for the second quarter were tremendous. One of the best growths of corporate earnings since 2021, I believe. So a nice, strong quarter. And it's easy to see why, right? Just the spending on AI and the strong results from a lot of the big tech companies. So that's what was the offset to the market. It's been a pretty good summer, of course, for markets, but you have to own the right things, of course. It's not just specific to the overall markets. Obviously, gold's done well, Shopify's done well, some of the Canadian banks have done okay. Some of our quality stuff is maybe lagging a little bit after strong years of performance. I mean, that's what's going to happen. Your stocks can't go up every single day, but as you know, here we focus 100% on the fundamentals and less on the noise. Anything that you were trying to enjoy your vacation, anything that caught your eye on the headlines or said, wow, I really want to talk about that with Barry when I get back?
So I think for macro in general, I think not that we don't pay attention to it and are not reading the same headlines that you kind of see out there, but I really think that generally when people think about macro, it makes them feel pessimistic about the way things are.
For sure.
And so like I'm sure if you go back throughout like basically the entire history of the United States, like people have been worried about politics at some point or another. And so I try and look past that. I think that a lot of it ends up being noise.
Totally, or a short-term trading opportunities
Right.
and something we're not interested in speculating, right? So, okay, you own gold, for example.
Right.
Let's say, okay, what are you cheering for gold? You're cheering that things get worse, that
Right.
the economy weakens, inflation goes up, Trump does more taco stuff. That's not really what we want to bet on, right? And so, Ernest, I saw one of the Canadian bank economists at a party. I was talking with him, and he's like, I like to buy silver. I like to do gold. I like to bet on these things. What do you guys do? I'm like, I buy cash flows of companies.
Right.
And he says, I get it. I'm doing different things. I'm trying to predict what's happening to the macro and adjusting my portfolio to take advantage of those opportunities. I said, that's great. We're not interested in short-term trades. And we feel it's really just, rolling the dice as to what's going to happen. So everybody's got a different way of investing, and you got to stay in your lane and stick to what you know well.
No, and I think that's especially true for some of the things that are happening with Donald Trump, where I think there's like I get it. Like I get why people are concerned when he talks about firing Cook, the Federal Reserve governor. I get why people are upset that he's demanding a stake in Intel.
Yeah.
But, like maybe for the Intel stake, for instance, like maybe that's the correct move to ensure national security for chips in the United States, right?
I mean, they've laid out the game plan. They want to bring back manufacturing, and they want to focus on pharma, on semiconductors, on technology, on AI. We're in an arms race right now. I think people need to understand that there's no moral center in China telling them what to do or what not to do. They're just getting it done right there, and they're spending a ton of money on chips, on AI, and I think the U.S. recognizes that you can't just let China win in terms of technology. And so there has to be some ways to get things done, whether it's the right way or the wrong way, their approach, that's up for you as a person to decide.
Right.
But what we obviously want is our companies who are spending tons and tons of money on capex to grow for AI. They want to make sure that they have fewer regulations and the ability to win in this AI race, because it's not going backwards, in my opinion.
Yeah, I think with respect to AI, I think that was one of the things that I really noticed myself using a lot during my trip.
Yeah,
Definitely much more than in the past, especially because I got one of those new Pixel phones, like the one that Google keeps saying is like the first AI phone that exists.
Yeah.
And it's incredibly useful. Like the apps that I used in particular were Google Lens, which is very useful for things like translations, where you just take a picture of it, like, or even just hold your phone up to something written in Italian, and it's immediately going to translate it to English. So that was one that I used. And then Gemini was extraordinarily helpful in terms of like finding things like, what's the bus fare how do I pay for the bus from here to here?
Yeah.
Or like, do I have to tip in this city? Stuff like that, right?
Yeah. No, it's invaluable. And now that Gemini, the way it's set up, either through AI overviews or going to the app, I can see why Gemini's catching up quite quickly to ChatGPT. So pretty exciting for Google, which leads us to our first topic about Google and big tech capex, right? Google, Ernest, we've held in the portfolio, I think, since 2014. I think it's been the best performing Magnificent Seven stock ex NVIDIA recently with a nice comeback. Amazon, it's kind of gone nowhere. Apple, as we know, is down year to date. Microsoft, terrific earnings quarter with Azure growth like 39%, but the gains have been given up for some reason. So Meta has been quite strong too, but keep in mind Meta at one point was $100 stock, $99 stock. So what's going on with Google? Your take on the recovery? Is Google going to be the AI winner? And a little more insights would be very, very helpful for those that own the shares.
I think part of it is just that a few months ago, sentiment on Google and just the surrounding narrative around the company was so negative that it didn't take a lot of improvement for the company to actually have rebounded a little bit. Because if you think back, there was I think there were prominent venture capitalists coming out and saying, oh, like no one that I talk to ever searches anything anymore.
That's right.
And then there was...
Did you see like a tweet? Someone said, I had dinner with all these people
exactly, yes.
And no one's using Google anymore.
Yeah. And then like the CEO was like did an interview where he said like he never read The Innovator's Dilemma.
Yeah.
So...
And then there was an app thing that came out in the Google trial. Eddie Q at Apple said Google searches are down big time, right?
Right, exactly.
Yeah. Through Apple.
Yeah.
Yeah.
And add to the fact that, ChatGPT everybody seemed to be doing everything on ChatGPT. So I think
what's changed?
So I think what's changed is that they've released new products. They've integrated their AI materials or the AI products into some of their products. So for instance, like they have AI overviews on search, and then now they added AI mode, where it's basically leveraging Google search and the distribution that they have to provide an AI powered search.
I think Google was trolling when they said they didn't read Innovator's Dilemma, because they clearly are working through that playbook, right?
Yep.
I wouldn't say they've blown up their search product, but they are trying different ways to increase, AI's distribution in it, and it may change things for not necessarily the best, but it could be a great long-term decision.
And then the financial results have been good as well.
Yeah.
I think despite what you may be kind of reading about, I think searches are still up. People are still watching more YouTube. The margins on their cloud business have been extraordinary.
Yeah.
Because it's not that long ago where I think people thought this was a structurally unprofitable business that was doomed to low returns.
Okay.
So I think it's just a normal business cycle where I think the narrative swung.
Yeah.
before people thought they weren't working on anything. It turned out they were working on things, and the models that they've been releasing have been pretty good. So,
well, there's a way to think about. So Google, throughout the last, I don't know, call it 5-7 years, has never had a high multiple, a premium multiple of earnings, right? I think it's traded anywhere from mid-teens to maybe low 20 PE. And if you think about it, Google search, one of the best businesses the world's ever created, YouTube doing fantastic, launching and working on AI and all these other things. And yet here's the market art not giving it a great multiple, right? And so when you say, well, Google's losing at AI or Google's not innovating anymore, maybe that's already reflected somewhat in the stock price, right? If people thought Google was the greatest thing for AI, it would have an NVIDIA multiple of 50 times earnings.
No, and I think that's true for the big techs in general, where I think there's this prevailing narrative out there that that the market is very enthusiastic about AI and the capex that's being spent on it. But I think if you look at the growth rates that these companies have and the multiples that they're trading at relative to that growth, I think the market is being skeptical about the returns that on the sums of money that these companies are spending.
For sure. So what's the plan? The plan this year is $400 billion of capex across all the major hyperscalers, including Meta.
I mean, like, you can quibble about the figure. Okay. It's a massive figure regardless.
And that's, these companies do regular there's regular capex, there's maintenance capex, there's growth capex, and then there's speculative capex, right?
So I think estimates are about 300 billion this year.
Yeah.
I think Amazon makes the figures a little weird because the retail business is also very capital intensive.
They also have to build, buy equipment, logistics, new warehouses, equipment, what have you, and that messes things up. Meta, of course, doesn't resell its network.
It's computing capacity.
Yeah. It needs it because it's growing like a weed. What we've read, of course, is it's all the companies will say, we're not building on spec. The demand is there.
Right.
In fact, we wish we had more.
Right. Yeah. And I think that's one of the things that I think most of the companies have been very open about what the money is going into, and very clear that they're not building it in advance of hoping that demand materializes in the future. They're investing in the NVIDIA chips and the servers and the data centers and the electricity grid because the demand is there already. They actually cannot keep up with the demand for chips and computing power for AI. And I think that's the key distinction between today's capex spend and some past analogies in maybe 2000 where companies were building out fiber.
So what's the bear case? People are worried that these companies are going to overbuild, that in 1 to 2 years, the chips that they have bought are going to be completely irrelevant.
Yep.
And they'll have to replace them. And obviously there are those that are skeptical that say AI isn't going to amount to a whole anything, right? And so even though it's clear demand for data is growing exponentially right now, and has been for years, it's, maybe it's overhyped, right? And you have Sam Altman, CEO of OpenAI, coming out and saying, maybe we're in a bubble, but I'm so excited about the long term, right? And so there's a lot of skepticism. There's articles that these companies are not going to make good margins on the capex spend.
Yep.
And so what is the counterpoint to that?
So I think there's a few counterpoints to that. The main bear argument against the capex on AI is that they're spending $300 billion a year and growing.
Yeah.
Industry-wide, quote unquote, AI revenue is about 20 billion.
Yeah.
And so if you're spending 300 billion, depreciated over however many years.
But that 300 billion isn't on just to achieve 20 billion of revenues. It's for other, like, how much of that is for AI or regular cloud computing and regular, you know what I mean?
So I think that's the challenge.
Yeah,
Or
and
that's
and everybody forgets these businesses are growing, right? So their capex, like Amazon is going to have $700 billion of revenue versus 400 billion a few years ago. So they have to, their existing businesses are growing.
and I think that's the main misunderstanding about the capex, the enormous sums of money that these companies are spending, is that these are enormous companies with massive user bases.
Yeah.
I think Meta has like 4 billion users
That's
around
crazy.
the world, which is like half of the world's population.
Yeah.
I think YouTube has like 3 billion viewers, right? So
Everybody watches YouTube. My mom wanted YouTube now on her TV. She likes to watch documentaries that she can't find it anywhere else. Of
and
course,
so
yeah.
so to the extent that these companies are able to improve their products because using AI to improve YouTube, to improve WhatsApp, to improve like Office 365,
Yeah.
right? And either charge a little bit more for it. It doesn't, the math becomes not too difficult very quickly just because of how many users these companies have and how profitable they are at scale.
Yeah. And they're not building just to support $20 billion of AI revenue. They clearly believe that that number is going to be multiples of that in the future.
And that's before considering the external demand,
Yeah.
like because for the hyperscalers, because they also have large businesses selling computing capacity to third parties.
Yeah.
So I think that, and we're seeing evidence of that. I think if you look at all the earnings calls of these companies, Meta will always talk about how because of investments in AI, which are directly related to the amount of capex that they're spending, that people are spending like 20% more time watching videos and clicking on ads this much more percentage of the time.
I mean,
Yeah. All this is to say that they are making money on the capex that they're spending.
For sure. And it's early. And I think what we'll have to see is in 26, 27, if there's an inflection of free cash flow for some of these companies.
Right.
Right. I think one of the company that's probably spending the most is Meta. $50 billion data center in Louisiana.
Right.
That's a lot of money.
No, and I think, to the naysayers' points, I think there is elements of this spending that are a little more speculative, and Meta in particular has been open about this, right? They are expanding computing capacity to be able to train advanced models and hopefully achieve what they call artificial general intelligence.
Yeah.
Where the payback on that is a little more questionable. But I think to your point, to the extent that maybe AI doesn't turn out to be as successful or as smart as it ends up being, and these companies pull back on spending.
Yeah.
I don't know if that means the share price is going to fall.
Yeah.
Because their free cash flow is going to go up. They still have strong growing businesses and they're not trading at high multiples.
Very interesting. So on a similar theme, of course, and this is our feature discussion, many people are concerned about AI killing software.
Yes.
So this is an interesting one for us. Apparently, there are concerns that you will just tell your AI to build a CRM, customer service software for you, and it will do it. You won't need to pay anybody for software. You'll just tell AI will do everything for you and upgrade it on its own. I can't fathom how that's going to play out, right? We have software providers here for all the software that we use. We don't know how to code, what improvements we're looking for. I'll give you a quick example, Ernest. So regulations change all the time in financial services. And as a result, we have to change the way we record data. We have to change the way we record transactions in our portfolio management software. The company that we use we pay for the software. They made the changes for us, right? I see in the future they will use AI to their advantage to improve the product. It will lower costs for them. I don't see them necessarily lowering the cost for us. So I don't see us building new softwares. And who's gonna Who's going to pay attention to it? Who's going to fix it? Who's going to adjust it? Who's going to know how to make changes? And who's going to be able to instruct the AI how to fix everything and teach everybody? It seems illogical, but obviously predicting the future is quite hard.
And especially because that's an area where accuracy matters a lot. Like you can't just screw it up. Like if you record the transactions wrong, then it's a big deal.
It's very big deal.
I think especially in these markets, it matters a lot for the customer to have a provider that they're trusting rather than just saying, like, kind of wave a magic wand and AI is going to do it all for you.
Yeah.
Right?
I guess what I'm trying to say is, let's say we were using a software for whatever, CRM or customer service software or portfolio management software. If they added AI features that improved our productivity here, we would probably pay more for that stuff. Right. And because we all know how to use it, we all like it. Humans need to have control over the data. So anyway, we're getting off rambling topic, but the bottom line is, we can say whatever we want. The stock prices of a number of software companies have been beaten up lately. Constellation Software, Adobe, Salesforce, you name it, their stocks. And these are companies that focus on enterprise.
Yep.
Sometimes to the consumer, but mostly to the enterprise, selling to other businesses. There's been no evidence in the results for these companies that there's been an impact from AI. Of course, that's early too. But, what did Constellation have to say? We saw its earnings come out. I guess we really want to center on what's the impact for Constellation and what does the future bring in terms of AI? Is it a boon or is it a bane?
I think we talked about this before.
Well,
first of all, I think the quarter...
We're going to keep talking about it because it's going to be a major theme.
I think the results in the quarter were actually really good.
Yeah.
Like organic growth was, I think, the best it's been for quite a while. The performance at, I think is it
Altera?
Altera, yeah. The healthcare business that they acquired is doing really well.
Well, I mean, all things considered, we have to remember that Constellation Software doesn't buy the fastest growing software companies. They like to buy software businesses that generate a lot of free cash flow that maybe are more mature. And so when they bought Altera, this was a sinking ship. This was a company where revenue was declining big time. And I think as a result, Constellation has proven they're great operators. They've turned this ship around. I think they also, Ernest, they bought this for $700 million, but only have to pay half now, and got a very low interest rate on that as well.
Promissory note.
Yeah, and in the meantime, the free cash flow at Altera, hopefully it's the start of a trend, but the payback's going to be very, very quick.
Yep, and I think the capital deployment, so the amount of acquisitions that they were able to make was pretty good as well.
Yeah.
So I'm not really too sure why the stock sold off through August.
Yeah. Well, the narrative is still there that as Constellation's market cap grows, as it becomes a larger company, and the management have told you a number of times, their ability to compound capital at the rates they used to are going to slow. And you're seeing it in the results too, right? Top line revenue is up 12 or 15%, not the usual 20, 25 that it used to achieve. It's a bigger company.
Yeah, I don't want to spend too much time on this topic, but I think Mark Leonard, the CEO, has been fairly vocal about this topic, where he says, to the extent that I think one of the things that people need to understand about Constellation Software is that every decision that they make and every capital amount that they spend is a very careful ranking of the potential return opportunities. So whether the company invests when they acquire a software company, whether that company invests in marketing, whether they invest in adding a new feature, whether they spend money migrating customers to the cloud, or whether they use that money to make acquisitions, right? Like these are all ranked relative to the potential risk and reward opportunity. And that's why a lot of these companies don't end up growing that well, because they find that the money that they're spending on marketing and product development is better used in acquisitions. And so to the extent that because of AI, software development costs are lower because you can now do more with a programmer.
For sure.
I think Mark Leonard has talked about this, where maybe they focus more on organic growth because now you can add a new feature that you were not able to, that might have been too expensive to do before. And so I think it just changes the equation in terms of how Constellation is deploying its capital a little bit.
Well, there was a note out today by Valeris, one of its business units, saying how they are successfully integrating AI across their entire business, whether it's helping improve software coding, whether it's helping with sales and marketing, whether it's lowering costs. They're very excited about it, and that's exactly what we're talking about. Maybe there'll be some offsets where AI could disrupt some software, but AI, I think, is going to help a lot of companies improve their productivity, lower their costs, maybe make better leads for new sales, new products. And so I don't think it's all doom and gloom.
Yeah, exactly.
Yeah.
I think historically, there hasn't been a bad time to buy Constellation Software. I don't think that has changed.
Yeah. Anything else you want to add on Constellation?
I think everyone's still waiting for the next spinoff. We don't. They haven't done one since Lumen. They've restructured a number of their divisions and put brands together that may hint at future spinoffs.
So they're just waiting for a big opportunity, of course, right? Usually these spinoffs happen when they can buy something quite large and merge them together and create a powerhouse of a company and use that as a base to start making acquisitions in specific niches.
Yeah, like they wouldn't spin off a company, like a division, just to spin it off.
No.
Like it's to use the currency of that division to make an acquisition, right? Yeah. So I think that I would expect like at least one over the next year or so. Mm-hmm. I have my guesses as to which one it might be, but we'll see.
Yeah. So as we're getting almost now, Ernest, to the end of the year, I can't believe it. Clients will look at their portfolios, and hopefully we'll continue to have a positive year. If so, that will be 3 up years in a row. I always tell clients, in short terms, no one knows what the markets are going to do. We're just going to stick to our focus. It's all about the fundamentals. We've been through the Q2 earnings. We had some disappointments in stock price movements, some disappointments in some fundamentals, but on balance, I think the fundamentals are improving. And I want to, everybody always talks about the negatives. I want to talk about some positives, right? What do you buy stocks for? To participate in growing future free cash flows, right? You don't buy them because of vibes or politics or macro or any of that stuff. And
hopefully not.
No, and there's some, and the underlying fundamentals of the economy also look pretty good. Unemployment still very low. Interest rates looks like they're going to be coming down in the United States. Inflation still very, very tame. Corporate earnings quite strong. So those are the good things that people need to focus on. We have record level of corporate earnings. This AI spending is not going anywhere. In fact, it's going straight up, and no one is expecting any pullback whatsoever as these models continue to learn. And the demand continues to be there. Every company, every business right now is being pitched by lots of AI software companies as well as consultants to improve their businesses. And the world's going to look really, really strange in the next few years. But hopefully our portfolio will look very, very stable. And that's all we got for you this week. We'll be back, of course, going forward with episodes covering a bunch of our companies, new ideas on long-term compounding, and of course, sticking with our plan and owning the best businesses wherever we can find them. So we'll see you back here real soon. This podcast is for informational purposes only, and any forecasts on the economy, markets, or individual securities should not be viewed as investment advice, a recommendation or an offer or solicitation to buy or sell any securities. Clients of Baskin Wealth Management and the speakers on this podcast may own shares of the companies discussed. Information on this podcast is current as of the time of production and is subject to change. If you have any questions or would like to subscribe to these podcasts, visit our website at baskinwealth.com.